Hello there, and a very warm welcome wherever in the world you're watching. Oil prices are in sharp focus after those attacks on two tankers in the Gulf of Oman. The price of Brent crude has been steady so far today, after at one point spiking more than 4% on Thursday. Now, the tankers were travelling to Asia via the Strait of Hormuz, which links Middle Eastern oil producers to markets in Europe, Asia and North America. At its narrowest point, look at that, the gap is just 39 kilometres wide. Every day, 17 million barrels of oil pass through it. That's almost 40% of all global oil shipments by tanker. It's also been the main export route for Iranian oil, worth between $66 and $77 billion in 2017. Of course, that was before the US reimposed sanctions against Iran in November last year. Now, it's easy to think this is some far-off story that doesn't affect you and me, but the price of oil, of course, affects the cost of goods in the shops, the cost of filling up the car, the cost of air travel. So let's unpick all of this with energy specialist Cornelia Meyer, the boss of MRL Corporation. Good to see you, Cornelia. So, oil prices were down a little earlier. They seem to have steadied, but there's still this feeling that they're on course to end the week lower. Surely all of this going on in the Gulf would mean that the price would go up, no?
Well, we have two forces that influence the oil price. One are the geopolitical tensions, mainly in the Middle East, which is an upward pressure. And this clearly you saw 4.5% up yesterday at some stage. And then there are the trade wars. And that really, at this point, markets are more concerned about that. Because if we really get into a fully fledged trade war between the US and China, think of what that does to supply chains. Less things to ship, less oil demand.
So this incident, how significant is it in terms of its impact on the oil market then?
Well, it's not that impactful at this point. But if we have more incidents like this, it will be impactful. And it's a stark reminder that the tensions in the Gulf are just very high, and we need to ease them because we have enough conflict in that region. And at this point, GCC is sort of a sea of stability amidst an island of stability amidst a sea of instability.
That's the Gulf Cooperation Council.
Yeah, that's the Gulf. That's the Saudi, UAE, and so on. So we can ill afford to have more conflict there, because as you rightly pointed out, through the Straits of Hormuz go 40% of all tanker shipment, 20% of all oil supplies.
But then, I mean, businesses can respond when they think the price of oil is going to go up. They can adjust things. They can respond when they think the price is going to go down. What we've seen this week is extreme volatility. How do businesses deal with that? And
that is really an issue, because if you, let's say, you're an airline, then at some stage the price of kerosene, of the fuel, can be between 30 and 70% of your operating costs. It's impossible to plan. So that's why we need not too much volatility. Oil companies too, they need investment. They can't get investment if one day it's so low, one day it's so high, which is why actually it is OPEC plus OPEC and its 10 friendly nations who basically take off oil when we have too much and put on oil when we don't have enough is a good regulator. At this point, we still see a little bit of a supply overhang going into next year. You see that when the IEA came out this week with their forecast, with their forecast, and they had a lower oil demand growth, 1.2 million barrels, lower than in many years.
And what do you make of China weighing in at this point in support of Iran and really hinting at a commitment to Iranian oil?
Well, yes, their refineries need Iranian oil. You know, oil is not oil, it's heavy oil out of Iran, and now that Venezuela has dropped off the map and we don't get any Venezuelan oil, it's important to get that heavy crude for many refiners. That's one. Secondly, Iran is an ally of China in the sense of the Belt and Road Initiative. It's one of the participating countries. So in that sense, it's this big landmass in the middle of the Eurasian continent, which is important to the Belt and Road Initiative of the Chinese, who want to reinvent the ancient Silk Road with that. So in that sense, there are many trading and geopolitical interests that China has in Iran. Also, it's at odds at this point with the US.
Okay, Cornelia, very good to get your thoughts on that. Thank you very much, and I'm sure we will speak again very soon. Thank you very much. Cornelia Meyer there.